Lots of economic news to digest, from GDP to existing home sales. Here to make sense of it, our economics editor Mike McKee and Bloomberg senior economist Joe Brusuelas. Thanks, both of you gentlemen, our SWAT team, as we're calling you there this morning. Joe, the 2.6% expansion in GDP fell short of what you were expecting. That's right. I expected to see a little bit of a bump upward due to an inventory adjustment, but they made an adjustment down on consumption. But hey, look, we're on a pace now that I think we're going to move from recovery to expansion in the current quarter. That's the fourth quarter. I'm looking at personal consumption on a pace of 3.5%, and I wouldn't be surprised if we see growth come in near 4% this quarter. And that's exactly how we want to kick off 2011. It's that year of really when we move from recovery to expansion, and we start to create jobs roughly at a pace of 175,000 per month. That's not bad.
Yeah, consumer spending was a disappointment in this report. It was revised down, but all the numbers since then, because remember, this is third quarter, ended in September. The numbers since then point to stronger consumer spending than economists had expected. And what Joe's talking about in terms of turning over from recovery to expansion, we're going to theoretically in this quarter pass the high in terms of GDP output on an inflation-adjusted basis. We'll be back growing beyond where we were before the recession.
From the market watchers that we've been speaking to within the past few weeks, there's this growing debate over where you see the growth. Do you see it in the first half of the year and then dip down in second half? That's Citi's view. Or, as others have said, no, particularly for business spending related ventures, it'll be the second half of the year where we see a pickup. What's your call?
I think it's going to be more in the first half of the year, driven by that cut in the payroll tax, which we talked about a couple months ago here. I think that the consumer is going to be the addition to the changing growth mix. What's going to be interesting is when we get to the second half of the year and everybody understands that this is just a temporary measure, will we begin to get calls for it to maybe be made permanent, and we have a rerun of the end of 2010.
Yeah, it'll depend on how strong growth is, and it's going to be a major issue because people are going to see an actual decline in their paychecks, and they'll start spending that money. It's not going to be enough that you're going to say, hey, I got a whole bunch of money, I'll put it in savings. It'll probably go out the door, maybe to higher gasoline prices, and then come the end of the year, if consumer spending hasn't really picked up and unemployment come down, there'll be calls to extend it.
In absolute dollar terms, the amount going to the consumer it's not a huge payday.
No, it's not, and that's the point, is that kind of money doesn't get saved, that kind of money gets spent. If they send you a rebate check for a couple of $100 or $1,000, you might put that in the bank. But $20, $30, $40 more in your paycheck every 2 weeks, you're probably just going to spend it.
But still a believer that nominal amount will make a difference overall.
Well, a billion here, a billion there, you're talking real money.
After a while, that's right. No, I think the multiplier looks good on the tax plan that they put in, especially the extension of the unemployment insurance and this payroll tax. People are going to spend it.
And yet, for the people who are going to be receiving it, for so many of the retailers we speak to, it's the divergence between the high and the low here. Like, they're saying, yes, the middle income consumer is back a bit, but that lower income is getting more and more dragged down.
We don't want to oversell this recovery. Right now, the upswing in spending is clearly being driven by the higher end consumer and the very low end at the dollar stores, Kmart, that sort of thing. The median consumer isn't really back in the game in the way that would give us a full set of confidence in that this is a self-sustaining recovery.
Yeah, part of the problem is the way this tax was designed. Consumers and businesses pay.
Right here.